everyone, and welcome to a new episode here at Enon Capital. I'm Paulo da Costa, and today we're going to go over the most important things that happened in the markets in the month of April. So keep tuned and let's go step by step. First of all, let's talk about a bit of market recap of what has happened this month. So especially a lot of things have been happening. There's a lot of volatility, mostly to do with macroeconomic signals and policy also issues that have been happening during the month. A lot of talk about the tariffs and the outcomes that this could generate into the market. No? So when we talk about equities, for example, during the month, the S&P 500 started the month quite negatively, as well as the other European stock indices, emerging markets as well, even Japan. Most countries, they had seen a certain correction in their stock market returns. Some of them were actually very positive during the year, especially in Europe, not the case in the US. And this month, during the beginning of the month, was very negative as well in the US. No. Going forward, the last 2 weeks of this month, we've seen kind of a recovery. The US is back now to almost the same level as it started the month. So it has recovered from quite a significant correction. If we go into commodities, for example, there's been a mix of performance there. We see the copper maintaining strongly its price. Cannot say the same thing for the oil, right? Oil has been going down a lot, especially due to demand concerns, and this has dragged the energy sector in the US and also around the world down very substantially, during this month. If we talk about gold is still one of the best performing assets in this year, and the month of April has not been different. Gold is still going over $3,300 an ounce, so it's still growing consistently over the year, as well as what we have seen in 2024. When we move into bonds, we have seen a rally in the long end of the curve in the beginning of the month, especially also similar to what we saw with stocks, a lot of issues with concerns on the growth of the US after the Trump's tariffs annunciation, and this has been very negative for fixed income investors in the beginning of the month, but it has also reversed in the last weeks, and now it's trading even as we speak at the 10 years around 4.20, 4.17%. And finally, sector rotation has continued during the month of April, where investors have been switching from growth stocks, which have been performed quite well in the last years, into more defensive stocks, especially sectors in the utilities, healthcare, and consumer staples. Those sectors have been really being the best performing sectors of the year. On the other hand, you have technology and consumer discretionary being the laggards of this year. Very negative performance of both. Now, going to a bit more of what really is the headline and drivers for this month, I think the main headline has been the tariffs. The Liberation Day that Trump announced tariffs in over 60 countries, some of them with a flat 10% tax, and others with going over 60% in some countries. The main one has been China, and the escalation continued for a while in the beginning of the month. And it went all the way up to 125% tariff on US goods going to China and 145% taxes on goods from China to the US, right? So, of course, this has been bringing a lot of volatility and tension into everything related to economic growth, demand, right? And even inflation. And this has spooked investors. And we've seen also that happening with the consumers in the US. Measured by the University of Michigan Consumer Sentiment Index, that has been falling a lot, the consumer sentiment, and especially during this month of April. We have seen the index going to the minimum, going back already to 2023, and what's most important is also the fear that they have of inflation concerns for this year and going forward. No. Apart from that, the Federal Reserve policy was also another topic of the month. The Fed maintained its target rate. It didn't change its the Fed funds rate, but at the same time, there has been kind of a signal that will be more dovish going forward. So we might still expect at least a rate cut in the next 3 months. That's what the market has been put in price, and potentially even 2 rate cuts in the next 3 meetings, right? Into corporate earnings, which is something that is very important as well. It's a very topic at the moment. We're still getting to know the earnings of the companies. Until now, it has been mixed. There were good results, and there was also more negative results. In general, the top line was good, but then there's also pressure on margins already, also related to the escalation of the trade wars. No, we're gonna have really interesting earnings report during the next days. We're gonna be able to get to know Apple, Microsoft, Meta, and Amazon's earnings report during this week, and this will help a lot to get a sense of how the Magnificent Seven will perform in the next weeks and months. No, and now moving to what we think might be interesting to keep a watch on for the future, for the near future, and also maybe positioning. Still, the AI is a topic that and a theme that should be here for the long term. We're already seeing practical use in our day-to-day here in On as well. So we are very bullish on the AI thesis. Of course, you have to be very careful with what you select for your portfolio, because like every other big technological change, there's going to be winners and losers. But we're very bullish on the AI boom and the massive surge it will bring to productivity and also to collateral. Let's say like this, collateral impact on other sectors. So apart from tech, we have been very bullish as well on utilities that can benefit with all this demand for energy and electricity. And they have been going up this year, despite not really seeing big rate cuts. They are still having great performance this year. One part of it being defensive, but another part also driving this AI thesis. No. Apart from that, there's also some tactical positions that can be interesting at the moment. We think that investors that like tech and other sectors that have been falling, it might be interesting to add some positions as it falls. So during these corrections, we did see interesting opportunities, for example, in the NASDAQ, that could have helped to average down the cost basis of the portfolio and also ride a potential relief rally that has been happening and could at least continue this trend if we see the trade war escalation going a bit more smoother, no? Where we see potential deals or at least pauses between the tariffs announced with President Trump and Xi Jinping from China, no? We think that commodities is also still interesting to be looking at it. We think that if there is a deceleration in the economy in the US and globally, well, this will definitely impact the price of oil, which has already, one could say that it even is already priced in, no? But we still think there's also opportunity still in gold, especially gold miners, because there is still a big disconnect between the return of gold miners compared to the return of the underlying commodity, no? In this case, gold. And there's also very interesting themes that to be on top of, like nuclear energy, uranium, and all this niche like assets, but you have to be very careful due to its high volatility. And then another thing that has been very interesting for clients is infrastructure, because it provides that consistent, steady return when you enter into more core assets inside infrastructure. It does hedge you against inflation. And at the same time, the total return at the moment is quite attractive in different funds and private infra funds, but also even global listed infrastructure stocks can be interesting if you have a more medium to long-term horizon. No? So talking about then what's going to be happening the next month, I think it will be very interesting to watch the May 7th Fed policy meeting. where we will have a bit more of a color what may happen to rates going forward. At the same time, in the middle of May, we will be getting to know the final CPI print for April. So that will help us know the inflation, the real inflation that is underlying in the markets, and if that's coinciding or not with what the consumers are expecting. And then also an ongoing theme is the China stimulus. They're probably going to continue stimulating the economy as we see they're still suffering a bit from deflation since the last CPI was minus 0.1 and also the data of February was minus 0.7. And also will be interesting to finalize, take a look at EM LATAM, because we'll be if you look at Brazil and even Mexico, they have a really good performance so far this year, and it may have to do also with commodity and some financial exposure, but also with the strengthening of its currency versus the dollar. No? And well, that's it for now. I think we covered many topics, and we will keep posting you on all important and major themes that continue to happen in this very volatile environment. Thank you so much, and keep watching our videos to be informed.
The opinions expressed on this podcast are their own and do not necessarily reflect the values, ideals, or positions of Inon Capital.